What's up, everybody? Welcome to another episode of Coffeez for Closers, where success is served daily. Today, we have a special guest with over 20 years of experience in the mortgage industry. He manages wholesale, non-delegated, and correspondent non-QM, non-agency channels for all of Deephaven, a top lender in non-agency, non-QM lending, known for developing exceptional sales teams and driving national growth. He's a top producing sales executive in mortgage banking. Get ready for insights on growth strategies from one of the industry's leaders. Please welcome Tom Davis, Chief Sales Officer at Deephaven Mortgage.
Thank you for having me, Joe.
Welcome, Tom.
Appreciate it. Nice to be in California.
Yeah, nice being. Yeah, isn't it beautiful?
It's out here, man. I took a little drive down to Carlsbad this morning. The ride was gorgeous. The ocean was beautiful. The mountains. This is God's country out here.
It really is.
Absolutely.
I love Carlsbad. I actually have a second home there. But you're in Florida. It's not too bad there.
It's great. I have the Bahamas 50 miles away from me. It's like from here to Carlsbad, the Bahamas are 50 miles from me. That's my second home.
Yeah, that's awesome. That's awesome. So, Tom, I like to start all our podcasts the same way. So what is your morning routine?
Yeah, for me is first thing I do, I wake up early every single day. And, I have a plan. I look at the plan the day before. I look at my calendar. And I work that plan, right? It's all about driving revenue, driving success, helping my team achieve their goals, their financial goals. And I get to work usually around like 5, 6 in the morning. I get started, check some emails, and then from there, I'll hit the gym. So it's important to get in shape and, work out. So I do about 4 to 5 times a week. I hit the gym, get back to the home or in the office, and I go to work all day till about 8 o'clock at night. I'm always on 7 days a week. In order to be successful or highly successful, it takes effort, right?
Yeah.
If you want average success is a 40-hour week. I like to work 80 hours a week. So more effort, more success. No effort, no results, right? So it's all about the hustle. In your office, you have those signs everywhere in here. I love it. I live by a lot of those mottos and quotes that you guys have here. And, I love to win. So in order to win, you got to work at it, right? It takes hard work.
Yeah. You're grinding all the time, and I love it.
Never stop grinding.
I love it. We have the same mentality. We both resonate with each other. So I'm stoked that we had that mutual introduction, and Tyler knew that we would hit it off once he met me. So he's been talking about you for a long time. Now, what year did you start in the mortgage industry?
Pretty much I started pretty much right out of college, and I have a degree in finance and management, and I did some retail for a little while, and then a buddy of mine was a wholesale account executive, and this was early 2000s, and I asked him how much he was making, and he told me he was a producer, not top producer, but I told him this faxed me his W-2 and his current pay stub. And so at the time, my wife was pregnant, and after he faxed it to me, I said, look, I told my wife, I'm going to fly back to Fort Lauderdale. At the time, I was living in Ohio for a couple of years. And so I flew back to Fort Lauderdale, interviewed with the managing director of this wholesale shop, and he hired me on the spot. So he said, come back, start whenever you can. So I flew back down. My wife was pregnant. She followed me a couple months later, and first couple months was very interesting because my son was actually born in a hurricane, and my wife was pregnant, and we went back to Florida, and a hurricane hit 2 months after that, and so that's kind of how I got into wholesale and the mortgage pretty much right out of college.
I can't believe you had the intuition to realize that you wanted to validate that person's income.
That's
before
what we
you even
did.
made the move.
Yeah.
I wish I was that wise.
Yeah, and I said, if this guy's making X, right, I'm going to make 2X. So I was in the wholesale space for let's call it 4 or 5 years, and then the financial crisis happened. But right out the gate, my wife had a baby, right? We just moved back to Florida, and in order to be successful, I had to put in the work. I was making more phone calls than anybody, being more strategic on who the brokers I was going after. And within that first year, I became a top rep in the company. 5 years, top rep, and And then the financial crisis happened. And for me, I was very fortunate because while a lot of the products, non-agency products and products overall went away, I ended up getting a job at JP Morgan Chase in a small division there called the Rural Housing Division, and crushed it for 8 years at Chase doing USDA loans. So became an industry expert, bought more USDA loans than anybody in the United States. And as you know, the riches are in the niches. So that was a nice niche for eight years when the market was kind of slow and all these products kind of went away. I had a product that people needed. It was 100% financing, no money down. And I've been very fortunate in my career to, in up markets, I've done extremely well, but in down markets is where I really excel, because it's in down markets, you have to out hustle everyone else to drive the production, right? And so, and I've been able to make some great moves, in down markets, including my last one I did, 2.5 years ago when I landed at Deephaven. That was a phenomenal career move for me.
That's awesome. One thing I'm really impressed about with you, Tom, is your grit. Now, what inspires you to have such a hustle mentality?
Yeah, so everyone's a little bit different, right? So, we all have a story. My story, my name's Tom Davis. You would think that, I was born in the United States, but I was actually born in Cuba. And so my father was in the U.S. Government. He was actually born in San Francisco. He met my mother in Cuba. And we came to the United States. And, growing up, my mom worked a couple jobs and really worked hard. And it was the worst feeling to see my mom. She's an angel. I love my mom. She's like my hero, right? She's an angel. And I saw how hard she worked. And I really, that it was a bad feeling, right? And so that's what has driven me at an early age. I started working when I was 13 years old, mowing lawns and being very entrepreneurial spirited at a young age. And I never wanted to have that feeling of not having and seeing my mom work. And so my mother is who's really driven me. And I started at a young age really hustling every day, whether it was mowing lawns, selling candy, doing whatever, right? And so that's always carried. I always wanted more and wanted to achieve more and just wanted to be the best self of the best Tom Davis that I could be. So
at what age did you realize you're an entrepreneur?
I would say at 13 years old. I had 20 lawns, and I bought a friend of mine had like 15 lawns, and so I bought his lawn. So then I had 30 lawns, and I was making all this cash, and I didn't know what to do at the age of 13, 14 years old. And so, one of in middle school, I actually had a teacher. It was a math teacher. His name was Alan Gaberwitz. I forgot the guy's last name, but he was a financial advisor for all the teachers in the county. And so this teacher, who was a wealth advisor, asked everybody after class, who wants to be a millionaire, right? And the guys and the girls would raise their hand. There was only a couple folks that raised their hand. They stayed after class. And so he started teaching us about mutual funds in 6th grade. And so a week later, he came to my house. He met my mom and dad. And he got me started in investing in mutual funds in 6th grade. And so since 6th grade, I started investing money. And that's one of the reasons why I got into finance at an early age. And, with money, there's 3 things that make money grow, right? There's time, interest, and how much you put into the vehicle or the fund, right? The investment. The number one thing that makes money grow is time. So I've been very fortunate to have time, and time's a very important asset that we have. And throughout the day, one of the things that I do is when I look at my calendar and I have white space, if I have the white space, I fill it up, right? Because it's valuable. And just like you people manage your money or manage, a lot of different things, like people should really manage their time better, because, you can be more efficient and be more strategic about how you utilize that time. Everyone says time is money, right?
That's right. Yep. That's right. So one thing that you're known for in the mortgage industry is like you are the figurehead for the non-QM space. Like what year did that start?
Yeah, so I love non-agency pre-financial crisis, and I've always been a niche guy. And conventional government to me is not really exciting; it's kind of boring. And in non-QM, it's more common sense underwriting, manual underwriting. And back in 2012, after Dodd-Frank was passed and ATR was passed, there was a company, it was a pioneer in the non-QM space, was Deephaven, where I work today as the chief sales officer. And they introduced non-QM. They brought liquidity to the space. They brought, created the products that we see in the marketplace today. And so I was going to conferences, around the nation, and what I really was intrigued by how they were creating the market. They were providing liquidity. So early on, I wanted to be a part of it. And about 3 years ago, I went all in. All we do is non-QM. We're one of the largest buyers, investors in that space. And, it's a great space because we serve entrepreneurial spirited borrowers. Non-QM is meant for self-employed. There's 18 million self-employed people in the United States that account for 33 million businesses, right? There's a lot of migrants in the United States. We have a mass migration. When those folks come to the United States, they work very hard. A lot of them start businesses as soon as they get here, right?
Yeah.
And so that's about 14% of our population was not even born in the United States. There's high net worth, high income borrowers, investors. If you look at last year, 26% of purchase transactions in the United States were investor transactions. Those are very entrepreneurial spirited, investors that want to invest in real estate. And so I just love the product because you're serving entrepreneurial spirited borrowers. And I love it. That's to me, that's my passion is the non-QM space.
And then at what point did you start being the spokesperson on all the panels and just kind of being the figurehead?
Yeah, I mean, I eat and breathe and, not non-QM, right? That's all I do. And for me, if you go to conferences or you go to people's shops, no one goes into those shops or no one wants to hear about conventional or government loans. It's all manual AUS, the same thing, right? Yeah. So for me, if you look at the mortgage space 2 years ago, the mortgage space was a $4.4 trillion market. Yeah. And originations this year will finish around 1.6 trillion or 1.8 trillion.
Wow, almost a third less, huh?
60% down almost, right? From 4.4 to 1.6, this year's 1.8. So about 3 years ago, a little over 2.5 years ago, I came to Deephaven. The reason why, because I knew that purchase money was where it was the place to be, but refi business was going to be almost non-existent. And I knew that originators needed products to compete, to retain talent. I knew they needed products to serve other referral sources that they never thought of, right? Because 3 years ago, 75% of the business was refis. It was just easy to manufacture, easy to kind of generate loans. So today's if you look at originator count in the United States, it went from 150,000, 160,000 to 80,000. We've lost 60, 70,000 originators in the last 2 years. Yeah. The originators that are in the market today are the folks like you and me, very hardworking, entrepreneurial spirited. They're here to work through it, and they are embracing non-QM in a major way. I mean, we're seeing, look, last month was a period of time, existing home sales last month were the second worst in the last 10 years. So second worst month over the last 10 years, and we just came off an all-time company record for production in the second worst purchase month in the last 10 years. And the reason why is because borrowers are adopting these products and they're leveraging them to tap into new referral sources. They're leveraging them to go after the top realtors in the United States. And so, we're teaching our customers, our partners, how to leverage these products, how to source these loans, how to be more tactical and strategic. We talked about time. So if you look at realtors in the United States, right, the top 5% of realtors, they account for 90, or realtor teams, they account for 90% of the listings. Top 5% account for 90% of the listings. So the bottom 10% of the remaining 90, 95% of realtors in the United States only have 10% of the listings. So if you're an originator, right, and you're in the mortgage space and you're calling on realtors, you should be contacting the top 5% that have 90% of the listings. So, if you look at production and people that aren't producing, they're spending a lot of time calling realtors that don't have listings. So what we do is we train our clients, go after the top 5%, be more strategic and tactical, and use these products as an end to go into those realtors and show them how you could put more borrowers in the homes. Show them how that realtor can maybe leverage these products, because realtors, a lot of them own investment properties. So when you teach them about a program like an investor program, DSCR, they're going to want to leverage that product on their own.
And they're all entrepreneurs. They're all self-employed.
Right. They're all 1099 self-employed. And guess what? Guess who the realtor works with? More self-employed people. Title, insurance, appraisers, contractors, builders, you name it. Roofers, plumbers, more self-employed people. So then now once they adopt it, now you start getting this, adoption. So that year over year, non-QM is almost going to 2x, almost 2.5x in a market where the market's down like significantly. It's going to 2.5x over last year's number. So
wow.
It's super
that
bullish.
means that entrepreneurs are making more money.
Absolutely.
Which is amazing. That's great to hear. Whereas the regular, non-farm payrolls they're declining.
Yeah, and entrepreneurs, as self-employed people, they're well-heeled. They usually have higher net worth. If you're dealing with investors, look, investors, once again, 26% of the market is investor transactions. In the investor space, right, we have existing inventory right now on the market, about 1 million units, right? And we have a 5 million to 7 million undersupply housing or homes in the United States. So there's a supply-demand imbalance, right? So, one way originators could really take advantage of the market and differentiate themselves outside of the non-QM space is by helping bring housing stock to the market. Now, how do you do that? New construction. So new construction is now 30% of purchase transactions today. 30%. 2 years ago, it was only 15%, right? Because existing homes are not on the market. No one wants to sell because of those lower rates, right? So if you could provide construction solutions for a home or a community or of multiple homes, that's how you bring housing stock to the market. Also, you have a lot of homes out there that are not habitable today. And so what do you do there? You could rehab them and bring them to the market. So if you have those, they're called residential transition loans. I'm actually here for a big conference. I'm on a panel talking about residential transition loans and non-QM. And so the fix and flip, bridge, ground up construction, if you have those products and you have non-QM products, it gives you a competitive advantage. You could serve all borrowers, not just the agency borrowers that are in that small box.
Yeah, there's a much bigger box in the non-QM space.
Absolutely. Huge opportunity in the space.
Let me ask you this. You're seeing a ton of success right now in the non-QM space and in the mortgage space in general. Like, what are you foreseeing in the future? We talked about non-QM possibly doubling. What else do you foresee?
Yeah, I think you're going to see non-QM continue to grow in a major way over the next 10 years. You're seeing what happened in Q1 of last year, that accident with some of these regional banks. Mm-hmm. The way a home builder finance is being done, that's changed. Bank credit is at a 20-year low. So banks have pulled back on a lot of these portfolio products, construction products, multifamily loans, commercial loans. So you're seeing bank pull back on that. And we expect that to continue to happen over the next 10 years, maybe 15 years. And the reason why is because there's regulatory pieces that are coming out, such as Basel Endgame, that require banks to have higher capital ratios. So banks are actually pulling back, and private credit is coming in. That's where we kind of fill that void. Yeah. And so, I think our gig economy is super strong. Very entrepreneurial spirited country. That's the engine behind our country, right? It always has been. And so I think the agencies have pulled back on certain products, on second homes and investor homes. They've kind of pulled back. And so, non-QM is going to continue to grow, and we're forecasting it to be a sizable part of the market over the next 5 to 10 years.
That's awesome, and that gives the people a lot of hope, because a lot of people are going all in on the non-QM business right now. Now, is there a specific skill or mindset that one must have right now to be successful in the mortgage industry or in any entrepreneurial industry?
So there's a couple things, right? So Number one, hustle is you have to have the hustle. There's the, I call it the hustle muscle, your heart, right? So you got to have the hustle muscle, right? So the heart, you got to wake up, outwork everyone. In this market, in every market, it doesn't matter if it's up or down or just horrible market, there's opportunity in every market. It's either you win or someone else wins. Either you take someone else's, their share, or they take yours. I know me, I don't like when anybody takes anything from me, my family, my sales team. And I'm sure you feel the same way, right?
Yeah.
So you got to have the hustle, right? Outwork everyone. And then from there, the other piece is be an advisor to your referral partners, an advisor to your clients. You have to be, help them not just by offering, service, but pick up the phone and become a product knowledge expert. Help them structure loans, help them put deals together that maybe they don't have the expertise. So having product knowledge and having product expertise, that's what really sets you apart. It's like any other profession. I mean, I'm sure you've worked with attorneys and you go to see a doctor, right? If you're going to have a surgery or you're going to put a financial plan together, are you going to go to the person that's new to the industry or new to that space, or are you going to go to the expert? You're going to go to the expert. Same with the loan originator, right? If the realtor calls it or a borrower calls that originator and that originator doesn't know their product, right, and doesn't know how to structure the deal, and they feel that, they can sense it, do you think that realtor is going to call them back? No, they're going to go to the expert, just like a financial advisor or a doctor or surgeon, right? That might be their paycheck for the month. Yeah. They're going to trust the advisor who they know they could trust to get that loan closed or whatever it might be, right? So know your products inside and out. Treat your customer like you want to be treated. Put them first every day and mean it. And out-hustle everyone. That's how you win big, and that's how you become highly successful.
That's right. I totally agree with everything you just said. Now, after all the success you've had in the mortgage space, you don't really need to grind this much. How do you continue to find that motivation to wake up and out-hustle everybody?
You know what? For me, it's a lot of different things, but, my family, my kids, I work every day for my family and my kids, and so They motivate me, in different aspects. My daughter, motivates me and goes to the gym with me. She has that grind as me. My son has that grind. My son's actually just graduated, going into college. He's going into finance. So it's like a family kind of DNA that we have, which is I'm super fortunate and to have that, right, and to have my family, the support there. But for me, my team at work, man, they go all in all day. 7 days a week, they push hard. I'm there for them. They don't work for me. I work for them, right? Yeah. And so, my team, I would say, and just I hate losing, hate it.
Yeah.
So I wake up every day. I want to win. I want to win big, right? And so I'm always looking at ways to win and push the ball forward and grow. And once again, I don't care if we're in a down market or an up market. I'm always just going to keep pushing.
That's right.
And the hustle, brings the results and the success in any market, right?
So Deephaven's known for having a lot of top talent. How are you, and you're the chief sales officer of the entire organization, yeah. So how are you continuing to foster talent at Deephaven?
Yeah, so look, we're growing. Like I said, we're hiring in all across the entire platform, in operations and sales. In the last 2 years, even though the market has been down, let's call it 60%, right? We've grown our customer base 4x, 5x in a down market, right? There's maybe 24,000 brokers out there. There's thousands of mortgage bankers out there. There's 90,000 plus originators. So we're just scraping the surface. So there's plenty of opportunity. You do a great job on social media. You have a lot of followers. People can't buy from you if they don't know who you are, right? Yeah. So you're really well. You do a really great job, phenomenal job at getting out there. People know who you are, right? So that's what I try to do with non-QM. I want everyone to know who we are. I want everyone in the United States. I don't even overseas. I'd like the people to know who we are, right? And so we're just pushing to grow the brand and create awareness. And so we're looking to hire and add the right people with that hustle and drive. And so there's plenty of opportunity out there. So we're just going to continue to go out there and grab it.
Love it. Now, what do you think the key factors are for the success of Deephaven to quadruple over the last couple of years?
Well, I would say it's not just the last couple of years. So what makes us unique is we have expertise, knowledge, and focus. We've been doing this for a little over 12 years. So we're not new to the space. We were the pioneers, and we have. Within the platform, we have a parent that manages close to $50 billion, actually over $50 billion in assets. They're the largest owner of single-family homes. Also in that ecosystem, we own a servicing platform. They own a servicing platform. There's another business that focuses on construction, renovation, fix and flip, bridge. So, all the components, everything's done in-house, and all the components to our platform are in-house. We don't use third parties. And so I think what makes us unique is our capital structure. With our parent, we have a diversified exit execution. We have the ability to securitize. We've done over 24 securitizations, but we also have the ability to whole loan portfolio loans in the funds that our parent manages, or funds that are our parents' funds, or funds that they manage for investors, right? So having the ability to securitize and whole loan portfolio loans, that actually gives you a diversified exit strategy, because securitizations in that market, if it becomes suboptimal, like when rates rose and we saw spreads widen in the mortgage space, securitization became suboptimal. So the whole loan, that strategy, the other strategy that we have, actually, we had better execution than the market, and a lot of folks don't have that additional execution, right? So that's why a lot of folks actually sell us their closed loans, because we have a diversified exit strategy.
That's awesome. Actually, a lot of people don't realize, that most non-QM business is sold to Deephaven.
Yeah.
They don't know, like we have like 50 non-QM lenders that we're approved with, but at the end of the day, they're all just selling them back to you guys.
Yeah, I would say there's a handful of investors in the non-QM space, like a Deephaven, only a handful that really kind of aggregate the majority of non-QM out there. So, so we're fortunate, and in that on the correspondent side, that's we've been doing that since day one at Deephaven. That's where we first started.
Yeah.
is in the correspondent side. So we have 10 years of that experience doing that. So
now, is there any advantages of going with some of these smaller guys? Their overlays seem to be a little bit more lax than Deephaven's directly.
Yeah, I would say, if you're going with a smaller guy that's inexperienced, we've seen a lot of companies that offer products and get themselves in trouble, or aggregate products and go out of business. Like you over the last 3 years, we've seen some of the largest non-QM lenders. They bought a whole bunch of loans. The market moved against them, and they were sitting on loans at 5% coupon, and the rates were at 8%, and they had to sell them at a discount. And they were sitting on $500 million, $1 billion. And so they lost a ton of money, and it put some of these guys out of business, right? So having the expertise, and if you go back just over the last 5 years, I think liquidity and having a reliable, dependable, stable liquidity is extremely important. So having the capital market horsepower that we have, gives us competitive advantage in long-standing power into the future. So right, so we're looking to grow the AUM and grow our business, and we over the next 10 years. This is not a short term play for us. The investors and our parent like the assets that we manufacture, and so we're in a good spot.
Now, how important do you think it is? Now, piggybacking off of that, how important do you think it is for Deephaven to continue to take big risks like that?
Risk is such as
acquiring these type of assets, these non-QM assets. Some of, because you guys take pretty big risks.
Yeah. Well, I would say if you look at the asset, it's not really a risk, right? The average LTV is like a 72 LTV. FICOs are 740, and DTIs are in the low 30s. These are well-heeled borrowers. They have skin in the game. 30% down, or 30% equity. These guys, when COVID happened, non-QM folks didn't go into default, and because they didn't want to lose 30% of their equity on these.
Some of these non-QM products are like 10% down, 15% down.
Yeah, I mean, it all depends. I think there's overall those characteristics that I told you, the 72 LTV, that's industry wide for non-QM for all production across the United States over the last 2 years. So and look, the investors getting paid for those loans. They're a little bit higher yield than the agency. But when COVID happened, those loans performed. There's a couple white papers actually written about those performance of those loans.
Okay. All right. So non-QM now is becoming much more acceptable on a national level,
Absolutely.
For the appetite for investors.
Yeah, every originator, like national top 10 originator, retail originator, is doing non-QM today.
Yeah, absolutely.
Every single one. If you're not doing non-QM, you're at a competitive disadvantage.
And you're not surviving in this environment. There's no way you could.
The guys that aren't doing non-QM, you know what I tell them? I say, look, I'm looking at my lock report today over the last 6 months. And I'm looking at the lock report, and all these lenders or brokers that are in your backyard, that are in other states, are doing loans in your backyard. And they're taking your market share because you don't want to adopt these products. And your loan officers at a competitive disadvantage because you can't serve self-employed. You can't serve investors. It's like if you go to a lot of folks' websites, they have FHA, VA, USDA, Fannie, Freddie, but they should have a tab on their site that says self-employed solutions, investor solutions. Yeah. There's more investors in the United States than there's veterans. There's more self-employed people in the United States than there's veterans.
Yeah, way more.
And the VA program is one of the best programs out there. So, you should be focused. Why not serve self-employed people? Why not serve investors? 26% of the market is investors last year, right? So if you're an originator out there, what I would do is look at your production for the last year and see if you're at 26%. If you're not at 26% and you're below 26%, that means you're under indexing the national average. And California has the highest investor concentration. It's like close to 31% per CoreLogic. So if your 31% of your production is not investor transactions, that means someone's eating your lunch and taking your business. And so, so you got to look at that stuff, right? And so you got to serve, those borrowers that are out there.
Now, circling back to your children, because I was very impressed about you discussing what your kids and how they.
And Grayson, I told them to watch today. I sent them there, so hopefully they're on.
I love that you've instilled in them that same grit mindset that you have.
Yeah.
Now, how did you do that? Because we're in a society of abundance, and you and I have been fortunate enough to, be blessed and bestowed in many gifts from this industry. Now, one of the issues we all face as parents is, making sure that our kids continue to grind like us.
Yeah.
Right. And we don't hand them everything, and they're not spoiled. And I really noticed that you're raising your kids well. And you saw, I tried to bring my kids to come grind.
Awesome, yeah. Your son yesterday walking around the office and doing videos.
Yeah.
I mean, that was like phenomenal.
Yeah. So I try to have them grind as much as possible. But I'm, for the parents out there listening, like, how are you instilling that same sense of grit that you have?
Yeah,
in your
I
kids?
mean, for me, first is education right? Education's important. Then we talked about the hustle. So, at an early age, my kids, I got them into school, obviously, but, and they played sports. So, I think that was good for competition and just, but early on, I put them into extracurricular, like learning, like mathematics and reading. Yeah. And that really has helped them excel, throughout, middle school, high school, and not going into college. My son's going into college. So I think, that extra, discipline, that'll help them in life. And for me, they see me work. They see how hard I work. I always tell them, my story and, what it takes and how hard it is. And it's a grind, it's tough, right? Life's not easy, right? So you got to go out there. If you want something, you got to go out there and get it. Like, Dad's not going to give it to you. You got to go out there and get it. I'll support you. I'm behind your back. I always will be there. So you just got to encourage them. And it's not like you got to do it as much as possible, right? And so for me, I'm always, trying to give, my kids love, give them advice. And, as a parent, don't look back, after when they leave the house and say, I wish I would have did this a little bit differently. Like, start doing the stuff today and like love your kids, right? And just show them what it's going to take to be successful in life, right? So that's it's a day in and day out thing with the kids.
It sure is. Now, piggybacking on that, like, what's the best piece of advice that you have ever received?
Best piece of advice. So we talked about when I was younger, the financial advice, right? With the teacher about getting involved in mutual funds, and that was great. I actually, as soon as my kids were born, I started them in mutual funds early on.
Really?
Yeah. Both kids. And so outside of that, I've had some mentors in life, and very highly successful, high net worth mentors, and they're all the kind of similar. They hustle and they work hard. And one quote, a good buddy of mine, he says, "Wake up broke. If you wake up broke, you'll never be broke. Hustle as if you're broke every day, and you'll never be broke." So he'll send me a text, once a month. How do you feel this morning? At 4 a.m. I'm like, broke, and I'm like, it's time to go. I'm going to go hard today. So outside of that, I think I'm fortunate. Like I told you, my mom's an angel. Every day she calls me, I talk to her, and I kind of do that with my kids and talk to my kids, and she always gives me advice, and she always, whether sometimes it's good advice, sometimes it's not, but she says, look, it comes from my heart, and if I'm wrong, just let me know. But she's awesome. So.
She's your greatest mentor.
Oh, she's awesome. Yeah, greatest.
Yeah, I was actually going to ask you what's your favorite quote. I think you mentioned that the other day.
I have a couple. Dress sharp, be sharp. That's a good one. Quote, slogan. And success is my responsibility, duty, and obligation. Right? Success is my obligation to my family. Right? Like if I'm not successful and it has to be my responsibility, to provide for them, right? And I take that quote and those slogans: dress sharp, be sharp for the sales team. You got to look good. You got to know your products. You got to serve your customers better than everyone else. So those are a couple that I live by.
Love it. Now, if you were 20, how would you build wealth?
If I was 20, I would buy a ton of real estate, right? Real estate, and I would put more money into the market, and just, I would compound my money a lot. That's the way I would do it. I'd buy a ton of real estate. I wish I could have bought more real estate when I was younger. But I bought some, but I think real estate's the way to go, because it's a great hedge against inflation, and rents are going to continue to go up. And there's a supply-demand imbalance. Like housing for the next 10 years, like appreciation is going to go up 4 to 5% a year, and you're going to have rent growth. So real estate, and then the stock market too, and bonds, and all asset classes. I would, instead of wasting or spending my money on stupid stuff, I'd invest it in assets.
Yeah, see, the young folks listening to this need to hear that.
Absolutely, yeah. Go definitely, if you're young, and read a couple books out there and work on your financial literacy, and read about investing in real estate. Read about investing in the stock market, and do it over long periods of time.
Now, with the advent of AI and all the different things that are kind of against education, do you still think college is important?
Yeah, I think college is important for, I think it's important. Yeah, absolutely. Yeah. I mean, my son is getting a degree in finance. Like finance, is a degree in money.
Yeah.
Right. So it depends on what you're going to school or what you want to do in life. But I think you could be highly successful and not have a college degree either.
Absolutely.
Yeah. I know plenty of people that have, super, super highly successful. They haven't, gone to college, but I think college is good for the right person, right?
Yeah, like the liberal arts majors in communications or something. Those are going to have why go to college?
But I think it's good to in your career as you grow and you want to build a business or you want to build just your career, like surround yourself with mentors and lean on them and ask them for the advice. Say, look, you're highly successful. I'd like to learn from you. Is it okay if you could be my mentor, right? And lean on them for advice and career advice and business advice. So I've been very fortunate throughout my my life to have mentors as well. So.
And mentorship is essential for me. Like finding I have many mentors.
Yep.
And I always seek mentorship. It's imperative that one seeks a good mentor and just confides in him.
Absolutely.
Let me ask you this.
Yep.
What's the most painful thing you've ever been told?
Most painful thing. That's a good question. The most painful thing. Probably a passing of like my father. That was painful. I was at the gym at like 5 a.m. and I got a call from someone and like, hey, your father's not. He's. I think I need to call the ambulance. He had already passed away. But luckily for me, like 2 weeks before he passed away, he actually came and visited me for a couple weeks. So it was an act of God that he came and visited me for 2 weeks before he passed away. It's hard when you lose, someone that you love, right? Lost my 98-year-old grandmother about 10 months ago. She was